Hey there, traders and investors. Bennett Tindle with tradinganalysis.com. Today is Thursday, October 1st, 2020, and tomorrow is Friday the 2nd. Tomorrow morning we have non-farm payroll, which is, of course, something we'll be watching, investors will be watching, especially following Wednesday's very positive ADP number. And I figured now would be as good of a time as any to bring you guys up to speed with what we're watching in the markets. And, of course, we'll start it out with the dollar, we'll move into gold, and then we'll jump over to the S&P as well as the Nasdaq. So as we reviewed in our last video update, we are tracking a wave count in the US dollar, which suggests the overall 5-wave corrective move has run its course. We identified an initial motive impulsive trend here that we're labeling as green A. We had a move down in green B. Now in our last video, we were looking at this as up in 1 and down in 2, and our alternate was an A, B, C sequence. The reason which we've changed and modified this structure is given the fact that we saw resistance right at equality of this advance projected from this correction. You'll notice that was represented here at 94.72. We hit that and we did roll over. Now that we're breaking into the vicinity of the previous correction, this is morphing the overall structure into a corrective trend as opposed to an impulsive trend. So we're looking at this now as A, B, and C of a W wave, which represents an overall 3-wave counter trend correction. Now, in the event we simply break through what should be support down here at 92.88, then perhaps, just maybe, what we're seeing here is a larger degree 4th wave. And the only reason I even bring up that possibility is given the fact that we did have a bit of a shallow 5th wave. You'll notice here that this wave 5 was relatively short and certainly fell short of your traditional 5th wave fib projections. We've got that track counted out as an alternate, and we'll be sure to bring that to you in the event that that does happen. But for the time being, we're simply looking at this as some sort of a 3-wave correction back into support prior to resolving higher in what would be C, or I should say Y, of this overall WXY complex. So that's the dollar. Let's now transition over to gold. Taking a look at our wave count in gold. As you guys know, we've been bullish for quite some time. We had a lot of fun calling the breakout from May of 2019. You've got a nice 5-wave structure here. You've got a rather swift wave 2 correction, which took you into the area of the previous 4th, which is very common when completing a higher degree motive impulsive trend. And we've now seen a 3-wave corrective pullback. This 3-wave corrective pullback unfolded as an impulse down in A, B, C, D, E. So we have a period of higher lows and lower highs in the form of an Elliott Wave triangle. That resolved into a secondary actionary wave to the downside, which did take us into a significant zone of fib support. We are seeing a response out of that zone of support, which would indicate initial upside projections once we get through 2089 include 2161 and 2138. Those levels represent equality of blue wave 3 as compared to blue wave 1, and this would also be an external 127.2% retracement of that correction in wave 4. Wave count validation 1788, upside resistance 2089. If you can get a little 5-3 print and start to turn higher, you can safely look for gold to continue to the upside. All right, now let's transition our discussion over to the S&P. And as you know, if you follow our work on our Elliott Wave Wednesday live stream show, which, by the way, we host every Wednesday morning at 8:45 Eastern on Todd Gordon's YouTube channel, we were looking and we continue to look at the market in a couple of different ways. We've got 2 valid Elliott Wave interpretations of the markets. But from a traditional and basic technical analysis standpoint, we're essentially stuck between a period of or an area of support and an area of resistance. And I'm going to go ahead and walk you through those now. You'll see here that going back into February 1st of this year, we pulled back to 32.14 in a little 3-wave correction. We then pushed to an intraday high of 33.93.52. So that was the pre-COVID collapse intraday high back in February of this year. We then came back down. You'll notice we tried to hold here on the daily chart. These are daily candles. So we tried to hold for one session. We failed it, and we broke right through what was 32.14 previous support. You'll notice that on the way back up, so coming off of the March lows, going into what is the June 7th high, we ran into resistance there. We consolidated, and what did we do? We pushed up to resistance, we consolidated, but this time we broke through the resistance. We then turned the resistance into support. So you'll see that we have support here, we have resistance here, we now have support here. We got up to 33.93 on August 18th, consolidated, broke through it. When we broke through it, we actually hit what would be a simple extended trend line, which actually originates off of the September of 2018 high. So if you were to just draw a trend line through September of 2018, draw that through the February high, you'll notice that's right where we ran into resistance on September 2nd prior to correcting lower into the 24th low. We are now attempting to hold this area as support, and we're back up into 33.93 resistance. You'll notice that during this consolidation, so the initial decline, we consolidate, we have the secondary move lower. This zone of resistance did hold. We're now holding this as support, and we're back attacking that 33.93 level, looking to get through it. What's really rather interesting is if I drop you off of the daily chart down to the 10-minute chart, you'll see that when we got to that 33.93 level yesterday, and as a matter of fact, I'll bring in price data, the high was 33.93.56 versus the 33.93.52 pre-COVID level. So taking you back to an intraday 10-minute time frame and zooming in a little bit, we then entered a rather swift little three-wave pullback, which took us to 33.40, so about a 50-point haircut in the S&P in a very short period of time. We then did manage to retrace into the close. So we were in the process of turning yesterday's session red. We retraced, we gapped higher, we broke through that, and now we're simply consolidating. So as we look at the daily chart in the S&P, we really are at a potential decision point in that, is this zone of resistance going to hold? This zone of support will then likely fail on the move down, and we do end up seeing further consolidation in the markets. Let's now transition this discussion over to what is our current wave counts of the market. And the first wave count that we're looking at here is, of course, the wave count which suggests this was simply a fourth wave pullback, and we're now seeing the initial 5-3 out of this price zone. Our alternate count suggests that, in fact, this was simply just 3 down of an overall complex correction. We're going to hold the 33.93 resistance, consolidate, move higher, and then we fade down into what would be 3,000 area support. I'm going to take you guys off the daily and drop you down to the 1 hour. When we last looked at this particular wave structure, we noted the fact that it was actually looking more like some sort of an A, B, and we were going to move lower here impulsively. This was a rather sharp decline, and it took us to a new low, which told us that maybe that we were actually going to just continue to the downside. But we ended up seeing a fairly significant move last Friday, which is fine, still within the lines of our preferred overall interpretation of the market. You'll see, though, that the correction so far has simply been a three-wave pullback. And this three-wave pullback took us just shy of equality. The low was around 32.09. Equality was represented at 31.81. So that's absolutely fine. And we're now printing what appears to be an impulsive 5-wave trend. So at Trading Analysis, we actually had a lot of fun trading the final move up in the markets. We had 2 positions on going into the final move, and we had actually 2 positions on coming out of that high, calling for this correction. We have now kind of taken a step back, and we're waiting for the markets to tell us what they want to do. So in the event this wave count holds, we should see some sort of a correction here in B, a resolve higher in C. That will complete the overall X wave, and then we fade lower. Alternatively, this count could still trade out. If this turns into a 7-swing structure, we could then actually assign this entire X wave sequence to the move off the September 24th low into what could very well be a high tomorrow prior to resolving to the downside. Which is why, given the multiple potential valid interpretations from an Elliott Wave standpoint, we've hit the pause button. We've done well trading into the final move, and we're now waiting for the markets to tell us what they want to do. The same count is valid looking at this as a completed fourth, up in 1, down in 2, and then a move higher. So traders, that's the S&P 500. Let's briefly touch on the Nasdaq. Looking at the Nasdaq, unlike the S&P, we can actually safely assign the third wave top to the September 2nd high, which would originate off the March low. Here we've got 3 waves lower. We're starting to turn higher. One thing that is a little bit concerning here is in our alternate count, which suggests the wave 2 is still ongoing. If I get you guys off of the daily and down to a 15-minute chart, unlike the S&P, where we can get more of an impulsive 1, 2, 3, 4, we're now moving higher in wave 5, the Nasdaq is still in a 3-wave trend. Okay, so this is actually still valid as a 3-wave move, which would kind of support what we were looking at as an alternate back in the S&P. Now let's take a look at a couple of individual sectors that also share a very similar wave structure to the S&P and that are trying to tell us that perhaps maybe this was just a garden variety fourth wave pullback. The first that we're going to look at is the chart of consumer discretionary. Consumer discretionary has been acting remarkably well as of recent. Consumer discretionary is up 18% year to date. The S&P is only up a few percent year to date, and the Nasdaq 100 is up over 30, I believe it's 35% year to date. Really rather remarkable outperformance of tech. So taking a look at our current move here in consumer discretionary, and I apologize for the labels here that are getting on our way just a little bit, but we'll make it work. You'll see that off of the March low, we've got the nice 5-wave structure, and we looked at this in our last video update. Off the daily down to a 1-hour time frame, we've got a very interesting move in development here. We printed 3 waves down. The 3-wave move was a measured move correction, so taking the magnitude of this decline, projecting it from that spot-on 61% retracement, gave us the low. This also, if you were to draw your corrective trend channel from the high through your B wave, and let's just go ahead and remove the current channel. If you were to draw your trend line through the high, through the B wave, and then simply project your parallel trend line through the A wave, that's where the market came, or at least consumer discretionary attempted to hold as support. It's worth noting that this also represents an overall 38.2% Fibonacci retracement of this third wave move, which is a very common and a very appropriate fourth wave target. Now what have we done? We're basically 3 up. You'll see, however, when we broke through this corrective downtrending channel, and this is very common when you're coming out of corrections, you'll see the market break through the corrective downtrend channel and then turn it into support. And that's exactly what consumer discretionary has done here. So really positive looking structure as it stands now. It could certainly morph into something more complex and join the markets, the S&P and the Nasdaq as a whole, as we roll over potentially into the more complex scenario that we're looking at here. The SMH, semiconductors, up 2.35%, I believe, on the session today. Really remarkable move. This wave count is about as valid as they come in terms of an Elliott Wave price structure. You've got a beautiful 1, 2, 3, 4, 5-wave period, higher lows and lower highs, and we're now breaking through that. So traders, as you can see, we're juggling a couple of wave counts here. The markets are at a bit of a turning point, and we're very curious to see what the election has to bring in terms of potential volatility. So we're going to go ahead and leave it at that. If you guys do enjoy our work, be sure to check us out at tradinganalysis.com. Stock options, cryptocurrency, and Forex. Hope to see you guys on the next video. Take care, traders. Be safe. See you then.